So I've taken a long position on EU after the release of retail sales news at 1:30 p.m. UK time, so around 8:30 UK time, US time. I'm anticipating price to come up and take out the buy side liquidity, right? And on the 4-hour time frame, looking at it right now as the candle's closing, I anticipate price to come down and take out these lows above that fair value gap and find support, which I think it will most likely do come down to that low now. However, on the 60-minute, we formed this range, closed above it, into this, call it structure zone, and then we have displaced lower as the news has come out. We made a high, then we formed an order block, and then we've pushed down even further during that news. And normally I do like to see some kind of aggressive bearish move coming into a higher time frame POI. So for me right now, that was the 15-minute fair value gaps and find some support. However, the way price has come down at the moment after taking out this liquidity of that high coming down, I do anticipate price to come down and take out these lows, and then I'll reassess. I have put my stops down below the 240 fair value gap, which is below this low, which is one of the main reasons I feel more comfortable taking that trade, which gives me around 1.2, or if I want to aim for those buy side liquidity, it's around 1.7. So that's the trade. So after the news dropped price into that fair value gap, I waited for some kind of a pause, which was this candle, the green candle at 840, and then I entered at the fair value gap. Fair value gap's 50%. So let's see how this plays out. This is how the trade played out. As I was entering the trade, I did say that we could potentially see price come down to these lows because there was a lot of liquidity resting below that, and which also happens to be above that 240 fair value gap. And that is exactly what price does, because I was quite early with my entry. Don't know why I entered, at the first sign of that bearish move down. I should have waited for a little bit of consolidation first, and for that consolidation to be manipulated, and then once that was manipulated, I could enter even at the low of this candle with my stops again below that, which I did enter on a different account, and then I got out at 1-to-1 with that trade. But with this EUR/dollar, as price started to move away from my direction, and as it started to move back in, I exited the trade at 0.25% loss, mainly because of the fact that, like I said in my pre-market analysis or pre-trade analysis, as I was entering the trade, or as I had entered the trade, that this is an early entry, and I predict price to come down to these lows and take these out, which is a higher probability trade than entering here, mainly because of the fact how price approached that daily time frame wick yesterday, held, right, found rejection at that wick on the daily time frame inside this structure zone, and then we came up even on the 240. We put in this consolidation that pushed price up in this bullish candle with liquidity taken out on both sides, which normally when I see something like that, I do anticipate a move lower. And then after that, we see even on the 60-minute time frame, right, accumulation, manipulation. This is further manipulation, but essentially distribution. But as price news printed, after that high was made, we made a new swing high that failed to, test the highs of this, the ultimate structure high, and then took liquidity off the new high, and then started to displace lower. So after seeing that during news, should have been a good enough clue, big enough clue, that price is going to come down and take out liquidity in a opposite direction, and then I could have looked for trades to go higher. Ultimately, I would have preferred if price came into that 50% off the 240 fair value gap, but it also comes into these fair value gaps on the 15-minute below these swings, which price kind of holds, I believe. Yep, holds, and then continues higher. Honestly, FOMC day the next day, and there was just too much consolidation going on. I wasn't sure if price could have easily come down here before going back up. So not the best trade. in my opinion. Even if I was going to trade down there, the ultimate entry for me was this, the first level of this right here, push down, and then price fails to go up. Ultimately, you know what, this would have been another entry. Again, comes to these highs and then finds resistance, and then comes down, takes liquidity, consolidates. Wouldn't have, you know, so much consolidation going on before price finds support, and then it's just, you see, choppy up and down, up and down, up and down. So yeah, that's the trade review. I was early on the trade, and prediction wise, FOMC coming out Wednesday, so trading this today before, it's not really the best trade or the best time to trade. The only other good factor after that was that we held this low multiple times, this 245 value gap, and then price found support the next day, and then yeah, next day actually this all happened. What is funny is that my target actually would have been hit had I just left the trade to play out, because of the fact that even though I entered somewhere here, I had my stops below the 245 value gap and had my target at these highs, and that would have been a win. I just would have had to get through all of this drawdown, which at the time felt like forever. And because I'd got out of that trade early, I also revenge traded a little bit here, where I entered a trade somewhere in this region to go short down to these lows after seeing price reject this buy side liquidity, and then the way it displaced lower, to me it was quite evident, or you know, it looked like price was going to go down there. I entered, but because I realized it's a revenge trade, I exited straight away. Although it would have hit targets, it doesn't matter. It's not something that I want to be repeating, so that's why I told myself, and I exited that trade straight away.